Hello, guys. How's everyone doing? I hope that you had a great day today. Just let me know if you can hear me on the chat, please. Perfectly, awesome. Just wanted to make sure that I got my setup right. How was your day today, guys? How do you like your Monday? Full of ups and downs. As we talked last Monday, I wanted to talk a little bit to touch the market sectors subject a little. So it's not everything about how do we just take trades and the chart, but then how do we decide what we get into and when we need to switch from, just trading Tesla and the same names. So that's something that we need to be very careful and thoughtful and knowing a little bit more about the economic rotation in the market sectors. It's general knowledge that it's really useful. So I just wanted to touch about something different for a little bit. Viral, no trade today, no homework done in weekend. Viral, CVS did the homework. So CVS was really nice. Still holding some runners. I trimmed today at the peak, but I'm still holding. But CVS was a nice trade. And that comes a little bit of what we're talking, how some technology went down and Tesla, Apple, and Nvidia, some of those names have income like, flushing a little bit. And then we have names like CVS going up, and then we have Costco and other names that are going a little bit higher. Baba did overnight, did pretty well. Rotations give it relative strength, correct. What's up, Empanada, for the class? Dolly, how are you, Dolly? No need to thank me. I love to do this. This is just general knowledge for everyone. I love to go back to some of the market. I love to sometimes just go back to some of these subjects is really important because we underestimate the knowledge that we need to have to take trades and be effectively and efficient while taking them. It's not only about getting into SPY and Tesla every day, but also and how do we know which names can we look at it? And remember, there are like thousands of tickers that we can look at every day. So we need to know which ones are the ones that is going to give us the best risk reward ratio on the day. Nice. It's vacation ready for the week. Beautiful. Where do you go to vacation, Dolly? I live in Miami, so this is like a vacation every day. The beach is beautiful, hot. We got some rain coming in, but the days are very nice and very hot. All right, guys. 8:05, beach in South Carolina. Nice. I hope you had fun. I'm gonna start, guys. This is a class that it's a little more of a little bit of deeper into some definitions and names, but definitely when we go to the how do we use the market sectors in every morning to see what's moving and where should we go, even how to trade it, because sometimes if I'm trading instead of going into, I don't know, banks for specific names, JP Morgan, Morgan Stanley, Goldman Sachs, or anything, I can just go to trade, the ETF of financials, and while doing that, I'll cover all of uh, all of them. And sometimes just by trading that on the day, it's more than enough. So we'll see how they move, how they compare, and some of the numbers that they have. Okay, so let's start market sectors, guys. I don't know how like everyone knows about the market sectors and how deep you are on this, but the market sectors are just categories in which the economy is divided based on the type of business. So each sector represents a segment of the economy, and that's why sometimes you see how you hear, the news on CNBC or in Bloomberg or Yahoo Financial, that you hear like we have a rotation into technology, we have a rotation into healthcare, we have a rotation into financials. These are the sectors that the market have that how do we divide, and we get to know how they are conform. So on the technology sector, we have companies mainly with software and hardware and IT services. So we have all the Teslas, we have all the Microsoft, Apple, all of those. And I did a little slide with the top 10 of each sector. So we can know actually, how this is made of each of these sector, which are the biggest companies that they have, and also how the percentages of the sectors affect the S&P 500. So we have the healthcare sector, which is firms providing medical service, manufacturing medical equipment or drugs. And we're gonna talk a little on what's the difference when we have, when we are in a recession, which of these sectors are the ones that, they keep on thriving based on what are the main necessities of the market. Sometimes you will see when we are starting to get into a recession, like some of the probably consumer discretionary, where it's not essential goods and services, but it's just luxury, is not as important as healthcare. Because if we are ill or we need any medicine or we need to have some doctor appointments, we try not to get cheap on those or to shrink on those usage that we have to do, but we will cut in other luxuries that we have and try to keep going through what we need. So healthcare, technology, financials cover banks, investment funds, insurance companies. Consumer discretionary are all the businesses that sell non-essential goods and services, and this will include some of the luxuries.
يعني إذا الأكل استوى بعد 5 دقائق.
Here I got we have energy, firms involved in the production and distribution of energy, everything that we have from gas through solar panels, all of those that we need to sometimes we see that we trade, we're going into XOM, we have into Oxy, we go into the ones from solar panels. All of those will be included in the energy. We have utilities, which are the companies providing essential services like water, electricity, and gas. Those are ones that there always are a necessity, and they're always going to be, top of mind. Then we have real estate. Real estate has, as all of you know, they have cycles. So all the firms involved in property development and management, it's gonna be part of the real estate. We got industrials, companies producing goods that are using construction and manufacturing. So those industrials sometimes goes hand by hand with the real estate. Same with materials. We are, firms providing raw materials using various industries. Materials, when we got hit by COVID, materials was one of the ones that, was really, really hit, because all the imports that we had coming from China and all the other countries, that when we have all the market close, all of those raw materials were not able to come in, and then we have all the shorts that we have on goods, and then that's when the cars start going up, and then some certain things like certain foods and stuff start, the prices start going up because there was a little bit of scarcity on it. That's common on the market cycles. like what happened during COVID. Then we have communication services. Those are companies providing communication services and media. Yeah, sometimes these tend to be tricky because this could be, AT&T. This could be, I don't know. Sometimes you can include in those Netflix, uh, Apple, because Apple has communication services because they have certain media. So you got to be careful in how you're gonna divide, the different types of sectors that we have. This is a little bit of sorry. This is how the market allocation and the sectors of the percentages are on the market sectors. So you will see technology is a big bunch of it. Then we have financials, then we have healthcare, then we have consumer discretionary, industrials, and then you start shrinking. You see how, real estate, as I said, is not as influential on those sectors. When they move, they don't move the market as much, or whatever news they happen, they don't move the market as much as when, we have, for example, Wednesday after market, we have Apple earnings. So the whole market is expecting to see what, Apple always is going to do and how they're going to do and what's going to happen. So same with financials when we have some banks reports, and then we have the rates. We have on Wednesday too. We have the Fed is going to say if they're going to increase or keep the rates the same as we have them right now. All of those, we have some big influentials for the market. So this is really nice. So you may know, like, whatever it's happening, how, like, depending on we're going up or down, if you're trading the S&P 500 or you're trading just, SPY or SPX, you will see, like, if you see that technology is coming down and you want to try to grab, some SPY calls, and you see that, Nvidia, Tesla, Apple are going and coming down, I will not trade, SPY calls because, it's a punch. It's the majority of that sector. If technology is coming down, you will see SPY coming down for sure. Then, what is importance? Why do we care about the market sectors? Well, we need diversification. We need to spread investments across different sectors for the purpose of what we do daily, which is just, scalping or day trading. You might not be as important as when you are building up a long-term portfolio, but indeed, when we are trading certain names, and some people don't like to trade on the downside, and or sometimes, like, if you have a choppy price action, you can just switch to, like IWM when the retailers started coming up and technology was coming down. That was an amazing trade. If you see the daily chart or the 4-hour chart in IWM on the last 2 or 3 4 weeks, it's been amazing. It's been just ripping. And then we have Tesla going up and down and moving all around, and same with Apple. We have like a huge peak and then coming back to another level. Like, it looks like a huge head and shoulders. So it depends. You can I got it, Ganja, no worries. If I see anyone else that is not muted, I'll take care of it. Thank you. So that's why we like to see that the diversification, and we need to know that how some of the sectors react against the other ones. So also we have, risk management. We have to understand how the specific risks of each sector helps in managing the overall risk of your portfolio. And I will go through a little samples of portfolio diversification and how do we can have what we call the ideal port. If you are just, trying to build a port. Remember, this lecture is not only about day trading right now. This is also about what do we do with the gains? How do we, if I want to take those gains and try to build a port, where do I put it? How do I put it? So that's part of what we need to do. So, and then also we have how to identify the sector specific opportunities. So that this is what we call, if you see, like, airlines are having trouble or banks are having trouble, that's when opportunities snug. If you see that banks are, the rates are coming up or coming down, I will go to the XLF and try to see what, it's happening there, how it's moving. and if I can grab a individual opportunity on certain banks, or if I try to just grab the whole sector. And I know some traders that they don't want to go for specific names. They will just go for the ETF of the sector, and we will go through those, and you will learn, and we will see at some of the charts on how they move and compare one with one another. So I find that to be really, really interesting to learn more about that. How do we know this, to know the different sectors, and how do we use them to balance a portfolio? Well, balancing the sectors in a portfolio ensures that you are not overly exposed to risk on a single sector. So we are buying, and this is just basic, how to construct your port. If you have $100,000 or you have 10,000, doesn't matter the amount, you're not going to have only Nvidia shares. I mean, even though probably you did great, what happened when Nvidia start coming down? You grab all your profits, and what do you do with the money next? What's next to you? Are you just gonna scalp, Tesla, Nvidia puts, or you will try to rotate that money into another name that it's gonna have another 20, 15, whatever percentage you're looking for, and that's what we do with our every, like, you should have a certain cuts of your port when depending on if you have a specific trade that, let's say that Nvidia was, your target was 30%, then, but you don't want to get out of the whole position. Well, you take, certain percentage out, but you have to take gains. You have to realize gains in case of anything happen. And then what do you do with that money? So here's where the sector or the balance in your portfolio or the market rotation, it's key, because then well, when technology comes down, usually healthcare goes up. So let me buy some UNH, or let me get some leaps, or things like that. So the effects of an imbalanced and imbalanced portfolio may be very volatile and susceptible to sector-specific downturns, and we don't want to have that. We want to be as diversified as we can, and you're always going to have some, like, I remember that I had, I was big in technology when Tesla started going up, and Apple, like, before the COVID, and Tesla was my biggest position. Well, before it was like a $2,000 or something like that. And when it hit like 2,100, I sold my whole position, and I thought that I was crazy. But it happened to be, I just happened to be right, because the charts told that. And then that's when the dump came in. And then with whatever gains I made with a full position, I started buying some technology when it went down. So remember, the key of all what we do is try to buy low and try to sell high. That's our target. That's for options, that for shares, that for everything. But you need to take profits. So when we do balance our portfolio, we need to know when we need to take, and then what are we going to do next with it. Some examples of a balanced portfolio might include equal parts of technology, healthcare, and financials. Those are the biggest ones of the market. Those are the ones that, sometimes you don't care about having Lenard, but hey, depends. You want to have some exposure. And then I would like to do another lecture on dividends. What happened if we just, this is building a port. Port have so many, it's very complicated and complex. Like, there are so many things that you can look at on building your port. But you can have a specific percentage of just dividend stocks, and you can share, like, you can trade them in a specific way. Yeah, every Monday you can buy 100 shares or 300 shares of a specific name, and then just sell calls against it, and then sell them. And if you get a sign on Friday, you get out of the whole position. You take the premium, and then you get whatever movement happened on the name on the week. If you're expecting that movement is gonna go up, that's amazing. And if you have margin, you don't even need to use your own money. You just margin for a week, and you get paid whatever gains. Deduct all of that from the margin that you're using and everything, and then you make money without needing to use your money. That's awesome. So we can go through that in another lecture. That's really interesting. But then that's why we need to know where to put that money when we're using it. So an unbalanced portfolio might have a heavy concentration in technology, making it vulnerable if you have, certain sector underperforms. And this is basic stuff. This is not, rocket science. We know if we buy too much of one name, we are just, overexposed to that name, and we got to be careful with that. That's the ideal. Doesn't mean that it's wrong, guys. If you have your portfolio is, let's say, $50,000 and you have only Nvidia shares, hey, good for you if you bought it at 120. But the ideal is, how do we diversify when Nvidia starts to come down? This is a little chart of how a diversified portfolio should be, like the ideal diversified portfolio. So, and there is no a correct way to do it. This is just an example. So you should have 20% mutual funds, 15% in ETFs, then some rates, then you have bonds, tabletop stocks, growth stocks, and upside potential stocks. This is just one of 1,000 combination, guys. Are you using margin to buy shares or options? You can use them for both, because you can use Byron, you can use the margin to buy your position. Let's say that you wanted to buy 100 shares of Apple today in the morning, and you're expecting through your technical analysis that Apple is going to go up on earnings on Wednesday. So you can buy 100 shares today when it went to 216.85, and then you can sell a call. Maybe you sell a $219 call against it. And if you're expecting that the position is going to go up, first you're gonna get whatever premium that's given to you, and then if the stock goes up, you're gonna get assigned at whatever price you did. So you're gonna gain whatever you get, those $3 from 216 to 219, and then you are making money also on the premium. And you can do that with a margin. I mean, that's a very complex subject. I don't like to play around too much with margin. I rather, if you have cash, go through the ones that you can buy cash, or you have your positions and you sell calls against them. But it's just an idea. Like if you are a little bit more advanced, you can always use margin in a certain way that it's gonna go your way. But you need to be very careful, because if it goes against you, you're gonna owe a lot of money, because you're gonna have to pay that 100 shares if you get assigned, and you need to buy them and pay them. So be very careful with that, guys. So this is just, as I said, guys, a an example of 1,000, different combinations that you can have your port. So don't take this as the only way, but it's nice to have it, diversified. That's all. So, and by having, how do we diversify? Like, we need to know how the economic cycles and how the sector rotation has, certain influence on the economic cycle. So what are the economic cycles? Economic cycles are just, business cycles that are the fluctuations in economic activity of a specific, economic experiences over a period of time. So fluctuations in economy that happens in a specific period of time. The cycles consist of periods of expansion, then we have a contraction. That's pretty much, we go up, we come down. Economists like to call them, more specific, names. And then we have the specifics on those economic cycles are the expansion, the peak, contraction, and I don't know how do you say that specific, if it's through, but the through, which is the end of it. Then we have the sector performance. That's where our sector rotation comes in. So the different sectors tend to perform better during different phases of the economic cycle. And this is where we're going to go into a chart that this is going to, we're going to see which sectors, depending on which cycle we're in, is going to be, where we need to be looking at. That doesn't mean that you have to go away from whatever names you like to trade every day. Some people like, for example, Dirty River just like to take SPY and certain usual names, as Flips likes to trade, AMD, and I like to trade Apple. That doesn't mean that you need to go away, but you can open your eyes in different ways and open your horizon of investment in other names. And you will be amazed on how many names sometimes you find them to have a lot of liquidity. They are, they move, they have volatility. That's what we need on trading. And sometimes you can, find a name that you will learn how it moves, learn the price action, and it will become your, golden egg supplier. Then let's to talk a little bit more in detail on the expansion. Technology and consumer discretionary sectors often perform well. So that's expansion that we had since last year and the end of last year. Then we have a peak. That's where we should be somewhere like in the last couple of months that people are speculating about what's going to happen. So will see, we saw energy, like, gas going up. Then we have material sectors outperforming a little more. We have some of the solar panel, like solar run, and all of those going up. And then we have a contraction. The most of the economy that we're looking right now is what's happening. Where are we right now? Some people will say that we are in the expansion. Some people will say that we are in the peak. Some people will say that we are in the contraction already. So the contraction, normally what happened? Utility and consumer staples are typically safer bets. That's the contraction. Then on the true, we have financials and real estate sectors may start to recover. Why? Well, normally what happened on this last section, we have financials and rates start coming down. Then who is not muted? Ready, muted. Then the rates come down, people get availability of funds again. They can start buying again real estate. And what's the first thing that you buy when money is cheap? You try to go into real estate, and then you try to put some money into financials if they have, and financials start giving and lending more money, and they can charge more. So it's a cycle. The sector rotation. How do we define it? Is just the movement of money investing in stocks from one industry to another, as investors and traders anticipate the next stage of the economic cycle. What's economic cycle? Expansion, peak, contraction, and true. I don't know how to pronounce that one. And the economy moves in reasonable, predictable cycles. Most industries and the companies that dominate them thrive or languish, depending on which cycle. So these will back depending technology. It's not like just when we have contraction, then financials are not very nice when we are on the at the peak. So just having this as a common knowledge, like a general knowledge, is very useful. So it will help you to see which names you need to keep watching depending on where we are. And you will see them. You will see the news talking about some rotation. You will see some movements on the ETFs, and we will go to that. So the fact that has found an investment strategy based on sector rotation, even investors who don't base their entire strategy on sector rotation will be wise to anticipate this cycle. Why? Because then we know which tickers are going to be the ones that are going to have volatility, and those are the ones that we want to trade. When we want to, like, you remember, volatility for day trading and swing, and then we have steady growing names. If we are just adding to our long-term portfolio, we don't care about the noise that happen on the everyday and the smaller time frames. We just care about the long-term move of the market, and normally the market just goes up. You see in all the cycles, but then it depends on when you buy, when you're going to have more profitability or not. Nico, you have it. I'm muting you there. Mute all.
Big Box, can you take out this trash? Trash day tomorrow or whatever.
Who has mute? You're muted. Killer Skull, you have your microphone on. I just mute you. Everyone muted. Okay. So the economic cycle. The typical economic cycle, this is how it goes. It's the duration of an economic cycle. It's 1 year. The characteristics of the economic cycle is the economy bottoms and climbs out of recession. That's the early recovery stage. That's what we thought would happen after COVID. We had this sort of, everything went down, and then we started recovering. And then the first things that started recovering was, leading factor. We got the financials, we have the materials, real estate, consumer discretionary. What happened here? well, you see that banks start lending a lot of money. Real estate, everyone had like these mortgages on 2.3, 2%, and it was a huge boom on real estate and consumer discretionary. Then we got the mid stage that it's between 3 to 5 years, and this is just approximately, guys. This is not but this is depending on how sometimes it goes faster, sometimes not. But that's what it's happened. What has happened in the market in the past years. The characteristics of this is that we got a business activity gains momentum. So more businesses, more things start to build up. Then we have corporate productivity and profits increase. Then we have the leading sectors are normally the healthcare, IT, communication services, and consumer discretionary. Who else have they? Okay. So these are the leading sectors when we have on the mid stage. Then the late stage, which can be from 1 to 1.5 years to 2 years, is when the economic growth slows. We are debating on where we are right now. Like if we are at the mid stage, when you see that some of these sectors are coming up, or when we have the economic growth right now start slowing, and that's what the Fed it's trying to do by holding the rates longer. So we have higher inflation, the interest rate put pressure on the economy. So that's what's happening right now. And then leading sectors are normally energy, industrials, and materials. And you see how technology start, coming down. So yeah, king crab. Yeah, we should be between mid stage, somewhere around these here, and then we have the final stage, which is the shorter stage. And the characteristics of it's that often it's marked by a recession. We might not get there completely, but as some economists will say that we are in a mild recession already. Then the economic growth shrinks and profits decline. Why? Well, we don't not as much people it's buying, not as much businesses are open, not as much construction is happening. The interest rates fall. That's where we trying to see if it's going to happen on the next couple of months or the last quarter of the year. And then what happened? People start saving and reducing spending. And then what happened on this? When people start saving more? Well, the leading sectors are utilities, healthcare, consumer staples, and communication services. Because these, when we start saving and we are not spending, are our core sort of spending. This is what we need to for our normal and let's call it comfortable basic living. Rate cut in September signals being in stage 4. I do believe so, SK. I do believe that if we're gonna be the entering this final stage that might be a little bit, you see, it's less than a year. So from the economist point of view, what happened this year with the economy, that we didn't have a hard crash on the economy, and we got moved and the market started doing like new all-time highs. Was really interesting. And you see it was because of the market moving and not as much as the Fed affecting the market. So that's really interesting. Normally, one of the ways on how the market is controlled is by the Fed affecting the rates and trying to slow down that the economic growth. Here, the economic growth kept going. It was just by itself, because there was so much development and so much money outside, and then we have the crypto and other stuff. But for the first time, now we can see a slowdown on the on that growth, and then we are getting to that. It won't be by a recession, but it's going to be the famous soft landing. We need to have that shrink on the economic growth, and we need to have the profit decline, and we need to have people start to save and not spending all the fancy cars, all the fancy watches. Like I don't know if any of you guys feel, but I love watches and all of that. And you see how the prices of watches, basic watches, Rolexes, whatever, they went like overpriced times 3, times 4, times 5. It was just crazy. And then right now you can find all of those prices coming back down. Even some of them are even cheaper than retail, because people overpaid in a time when they have a lot of money, and it was like boom. And then, and the cycles always happen when, we start the shrinkage, then things get cheaper. People try to get out of things that they overpaid, and we have an excess of demand of supply right now. And when we have an excess of supply, prices come down. So everything in the market is based on supply and demand. A shrinkage on Bitcoin, on the supply of Bitcoin, is going to make the demand goes up and prices go up. We have right now the news that happened is that I think a hedge fund or someone kind of sold like 9 million Bitcoins or something like that. So I don't remember the exact news. And you see how the price of the Bitcoin just flushed, like, I don't know how many, 6 points, 10 points or something like that. So supply and demand, basics. And going back into the rotation a little bit, like when we have to move in our investments from one sector to another based on economic conditions, that's when what we do to maximize returns. And that's what I was talking before when we try to build up our port. What do? We try to move from, the sectors that where we already were able to cut the profits to other ones that are on the way up right now, trying to, for the next cycle, make more profits. And this is what it's been happening for the last, 100 years on the market. This is what happened. This is what like everyone is doing, and the people who's doing this is what Warren Buffett does. You see, for the first time in the whole holding that he had, Bank of America, he took profits. Why? Well, he might be expecting that the price it's coming down, or maybe he just needs to cash out and have more money for other new names to spend that money. So he doesn't want to be over leveraged on one name that that is, I think, his biggest position besides Apple. And he just cashed out, I don't know, 100 million or 1 billion. It was something crazy like that. And he's sitting on $158 billion cash that he can spend on whatever it's going to be the next rotation. So that's the dream of anyone, every hedge fund manager or anyone, with money. Like if you have $100,000 just sitting in cash, waiting to see what's going to be the next stock or sector that is going to go up, that's a dream. You have your consolidated portfolio giving you dividends every week or every month or every quarter, and then you can just keep on going while the rotation happens. And during an economic expansion, normally we have overweight technology and consumer discretionary sectors, and then during the contraction we shift to utilities and consumer staples, and we'll go through that. So how do we watch this? How do we know how the sectors move? So normally all the sectors have ETFs, and probably you will hear about sometimes us talking about it. You see Tilo talking about those. The ones that are highlighted or bolded in bold are the most important ones, XLK. So every time that I want to see where technology it's doing, I just go to XLK. I just added a couple of extra ones on each, but XLK is going to be your main one on technology. Then you have in healthcare, you have XLV, financials, XLF, consumer discretionary, XLY. Then we have consumer staples, XLP, energy, XLE, utilities, XLU, real estate, XLRE. We have industrials, XLI, materials, XLB, and communication services, XLC. So I'm going to show you something right now. I'm going to stop sharing this one, and I'm going to jump to my screen to share you how we can see some of this. So if you have any questions, just let me know. Will a rate cut in September signals us being stage 4? I think SK is going to be the beginning of a stage 4, but that's why they want to be very careful in when to cut the rates, because they don't want whatever they shrinkage and the economic growth, the slow kind of what's happening on the market right now, they don't want it to accelerate it and have a hard landing. So they will try and just to have a slower economic growth and that shrinkage that they're trying to do. So we have a soft landing, and the interest rates are going to fall, and with increasing savings going to fall. It's going to be soft. It's going to be manageable. It's not. No one's going to be. It's not going to be a huge recession when no one is going to be able to pay or anything like that. They're basics, staples, and utilities, and then we can just move from there. But as you can see here, guys, what I have in my watch list is I have an S&P sectors watch list, and I have this open every time with my, different. I got a futures. I have my like an actual portfolio, which is what I'm looking at, and then I have the S&P sectors. And if I want to go through this, I can just go to my chart, and you see I got XLY. So you see, look at how XLY is moving at the moment. So what it's XLY, we know that it's a consumer discretionary. So look at this move. Look how it went up on the last. This is a 4-hour chart, and I just want to. This is a great way just to know what's happening, where we are on the 4-hour. I'm gonna go to the daily. Look at the daily. What happened? We went all the way down, and I knew this is on 24th of last year, on September of last year. This is 1 year from here. Look at how the market, if you cashed out before the COVID and when everyone was saying that everything was coming down, and hold some cash and then bought back some consumer discretionary ETFs here, look at the move that you had all the way until here. And now for the first time we're having a little slowdown again. So XLY, then we go to XLC. So what do we know? Who knows what XLC is? Communication. So we have our communication, same communication. If I go to, let's say, the weekly, look at that. Look at what happened. We were like, communications was on the 21st, on the year 21. Look at where we was at 86, where it went completely down again on September 2022. Year 22, not 22, but on the year 22, look at what happened on 2 years ago. And then on this cycle, look at that move back to same exact rejection where we are when we did last, a year before that, 21, 22, and this is 2024. So wasn't it beautiful to get out of here? Or if you had a position here, then I don't know, sell, puts on your position and then buy some more here or get into this position here. But how do we know that? Well, we need to go to our sectors to be able to see this. And then whatever, and I will go through, which names were included in communications. Look at how they do it. This is huge. This is amazing. So this is our things that we can learn, and we can just, have a more broader horizon of names that we can trade just by knowing that, if I go through my communication sector, I can see the moves and where we are. Let's go to XLRE. This is real estate. What happened to real estate? Well, real estate was pretty high, as we know. It went down, 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 and we are approaching, even though, real estate, it kept on selling, it never really went down. It says that the inventory and it slowed down a little bit. Look at what's happening right now. If rates start coming down, people are going to start, lending. It's going to start asking for more money from the banks to buy more properties again. And then we might see this cycle go back to maybe here. This is 2021, December 2021, where we are here. The lowest was on September 2023. And where are we right now? In the middle of it. This is right now, July 2024, and we are sort of in the middle of it. If rates come down, what's one of the first ones? Real estate should be coming up again. So any of, whatever includes, you can trade XLE or just get into any of the names like Lennar or any of those developers, and try to trade them. Then we go to XLU. XLU, utility, guys. We have all the end utility sectors. Again, look at those move. We touched that, sort of margin on the way down and then up, broke up, and we're trying to find again new highs or those highs that we were. This is 2022, this is 2023, 2024. You see, same rotation cycles. So what do you need to do here? Sell. What do you need to do here? Buy. What are you gonna do here? Probably sell somewhere around this area. If we break above this and we are somewhere around here, you need to trim, you need to sell, and this is not going to be the sector that you want to go unless we break somewhere around here and you want to see this space to trade somewhere between this area. So I probably can just safely say that I can just grab this price action here and then put it somewhere around here. And this is going to be my last point somewhere around there. Then XLV materials. What the materials are doing, well, 2021, 2022, 2023, 2024, going up, sectors, look at those blocks, resistance, support, resistance, support, resistance, support. We broke resistance, find a new support, and we're trading in this new support, and we have a new resistance. We break up, we're gonna keep going up, we stay here, we're gonna keep trading on this price action. So those are things that we need to know. And if we know that we are in this lower level and we know which names can form part of the material sector, we can play any of those on this area here, guys. Let's go to XLV, healthcare. So what do we got in healthcare? Look at that. We got, let's see if I grab a little more time. 3 years, let's grab 5 years. What happened? Healthcare went down. This is 2020, and from then on, all the way up 2021, 2021, 2021. And here's where we've been trading with all the rejection, and for the first time we broke it, stay above, and we have consolidation, and then we broke that little new sector here, this new block of trading. So healthcare going up, guys, here. Very interesting to see what's going to happen with this and where we're going to go. So if you were in, probably we go to UNH, look at where that, United Healthcare has been doing since the same time on 2020, just up, consolidation, and now we're breaking new highs. So these are names that you can keep on, you know where to trade if you know where the sector is doing. XLP, consumer staples, same thing, went completely down in COVID 2020. It kind of recovered completely until 2022. We got 2022 or 23 around here, 2023. And this year, it's been just going up perfectly, holding those margins there in that range. Let's do the 4 hour. Look at the 4 hour, how beauty that range is. Here, respecting the 20 daily SMA. Look at that 20 daily SMA on top. It just went a little bit down, on top, just holding that 20. And for the first time in a long time, the 20 and the 50 are tangled together there, but the 20 is going up again here. So what happened here? The 20 crossed over the 50 daily, broke up again, and then we have another push, and we might have here, if the 20 start getting away from the 50 daily SMA, we have another push all the way bigger, higher. So consumer staples, I see it going higher if we keep going this level. So it's going to break this level, and go to the upper trend. XLF, financials, look at that beauty. Financials, this is, I'm going to go for the weekly. Look at financial, guys. Look at how financials have performed since the September 2023. If you bought any, whatever, Morgan Stanley, JP Morgan, Bank of America, Citibank, all this year, it's been just going up all the year. I mean, there's nothing. And here, when we are looking at the weekly, You see, we don't care about the noise of every day, every week, on everything. If you bought anything here at 31, everything should be up. So if we grab, I don't know, let's say Citibank. Look at Citibank from 38 to 65. That's just Citibank. If you have Morgan Stanley from 69 all the way to 109. So we know where to get if we know how the sectors are performing. So that's one of the advantages of knowing about the sectors and know where we are. Look at, if we can chart the sectors, you can chart the sector and include the all whatever they convey. So look at how the industrials they were doing here, beautiful, and look at the break. Look at break, retest. This is textbooks charting up, and then we have a new consolidation of this sort of bull flag. And what are we holding or waiting here? Break and retest and keep going up if that's what's going to happen. So every name that we have in industrial should be going up, up, up here. Then we have XLK, our beautiful technology sector. Here, 2022, when all went going all the way up, 2023, and happened kind of consolidated on 2023 until September 2023, and boom, all the way up. So again, look at how this is why we want to have cash available to trade all these move coming from previous years. Then energy sector, this is where we are. We're being kind of trading sideways between this price block here, price action. We had a look above and we're just holding the here, not going up or down. You see how they gas and it was coming down these days. So we might just go back to this trend line here and try to bounce from this trend and keep on going sideways. So I just wanted to show you how we can, see on knowing the ETFs, how they look and how useful they are. So let me go back to my chart here. Here we go. Here and here. And then here is, guys, some of the top 10 per sector. So this is really cool, really nice to see. How do we know which names and which tickers we need to trade? Well, technology, we have Apple, Microsoft, Alphabet, Amazon. I forgot to put it with percentage, but they should be organized probably percentile. So these have changed one another in a little bit, but you have Amazon, Meta, Nvidia, Adobe, Cisco, Salesforce, and Intel. All of these names, keep a watch whenever you see technology going up. Healthcare, Johnson & Johnson, Pfizer, Merck, Abbott, Thermo Fisher. Eli Lilly has been incredible, this year. Medtronic, Bristol Myers. This is the only thing that you need to know, guys. And you can have this on one side. You don't need to know it by heart. You can just, search it on Google, go there. And if you see the healthcare moving, which ones are the ones that you like the most? Like sometimes when we have financials going up, not necessarily, some of the financials move better than other ones. So I like Morgan Stanley a lot, and I like Goldman Sachs. I used to trade a lot of Citibanks, but I wasn't really pleased with the way with how this stock paid compared with Morgan Stanley or Bank of America. Then you can see if you're a long-term holder, how you can search on those 10 top names, which are the ones that pay better dividends too. So there's so many things that you can do and diversify that. And I'll show you something that is really useful on TOS if you don't know it. Let me finish here the names and we'll go through that. Consumer discretionary: Amazon, Tesla, Home Depot, McDonald's, Nike, Starbucks, Booking Holdings, Lowe's, Target, General Motors. All of these guys, General Motors, Target. I love to play Target. Starbucks is having earnings, I think, Tuesday, tomorrow after market. McDonald's I think it went up right now today, crazily. Coca-Cola last week paid big on some swings that we did. Procter & Gamble on consumer staples. So Walmart, we have been trading Walmart for the last couple of 2 months. Colgate Palmolive. We don't trade as much, but we go to Mondelez or we go to Coast a lot. Philip Morris, Kroger. Energy, everyone goes to XOM. We have to Oxy. We have CVX. Mara, MPC, we have Mara, we have, these are the names that you need to know and have. You can have 3 or 4 in a watch list and just see how they move, and you can separate it by energy watch list, consumer staples watch list, XLY. You can just remember, you can have as many watch lists as you want on your watch lists in TOS, so you can just build it up. Utilities: Duke Energy, Dominion, Southern, Ecolon, American Electric, Sempra, Excel, Consolidated. Real estate: you have American Tower, Crown Castle, Equinix, Public Storage, Simon Property, Avalon, Ventus. Those are the names that you need to know. Industrials, everyone, Honeywell. We go to Boeing, Caterpillar, it's a huge name, 3M, General Electric. Every time we have some defense, going up, we are in pre-talks of war with someone or everything. You see Lockheed Martin going up, L&T, UPS, normally, like, their earnings are normally, I think the last ones were the only ones that were pretty bad, but normally they're huge. And so in those industrials, they are very, very useful name to have on your charts. Same with Deere. And then we got materials that we might not, DuPont is a huge name, but people don't go because they're not technology and they don't trade as fast, and they're not as volatile as what we are used to trade. But these are names that when you have some longer term options, and then you have some straddles, or maybe you have some different strategies that you have on options, they work very, very nice. So we have to know what they are. You can find it, this lecture is going to be available for you in 2 days in our tab of the recent lessons, or if not, you can just go to Google and look for all this information, guys. I'm just consolidating all the information to share it with you, so you can open your eyes a little more and see not only how the sectors work, but what are included in those sectors, and those give you ideas on where to jump whenever you're frustrated because I don't want to trade anymore Tesla or Nvidia. Hey, let's go for another name. Sometimes, a fresh new name and a fresh new chart will give you new opportunities. So there's nothing wrong with doing that. And then we have the communication services. And you see, you might thought that Alphabet will be only on technology, but then it's communication, because it's what they're doing with Google, what they're doing with Facebook, what they're doing with Instagram, and all of that. So we have AT&T, Comcast, Walt Disney, T-Mobile, Activision, which is huge. So these are some of the names and how the different locations of the market that I wanted to share with you guys. If any of you have any questions, please let me know on the chat, or you can unmute yourself. And I just wanted to share something else that you can use on TOS that it's really useful. If you go to share, excuse me, I'll go back to my TOS. This is one thing, guys, that you can use when we are in TOS and you go to Market Watch. If you go to Market Watch, you have a calendar that you can check all these, different tabs to see what's next on each of these days. And all of these days during every week, you can see, I put what earnings are next, what dividends pay. So if you want to see if you want to maybe play that dividend plays, as I said, maybe buy shares on some of these that are paying dividend on Friday. If you click here, it's going to tell you all of the companies that are, paying dividends on that Friday. And this is really useful because you can go through all these tabs and actually choose which of these dividends you would like to participate in, and just go through, the different days of the year, or the conference call, or the market drive. So you will find the calendar on the Market Watch here. So it's a very nice tool. And even on earnings, you want to be aware which companies having earnings when. You can see all of this here. So earnings, you'll see which companies. Sometimes, remember, we have the main companies are the ones who show in the calendars, but there you have, I love Coco, by the way, Vita Coco. They're having earnings on Wednesday, July 3rd. So I'd like to see what, let's see what Coco is doing. Look at that chart, consolidation. So look at Coco. Coco, if we maintain that we're trading on this sort of block here, and this has nothing to do with the sectors, but just trading, my first view should be that they might bounce from here. They should bounce back up because they bounce 1, 2, 3, 4, 5, 6, 7 times. So if they're not breaking down, they should do a little bounce. So if I go to the 4 hours, let's see the 1 hour, where are we? And we're expecting to have, earnings here. This is going to be interesting to see if they don't break down before that. I would love to see if they have, maybe have a little lot of going back to that 200 daily SMA or somewhere around here. I'm gonna read a little more about Coco, but I just wanted to share, guys, that you can go to the market watch, to the calendar, and have all this information here, and that this is going to open also a lot of new names and opportunities that you can, you click on it and it's going to give you, I can create an alert right here, and it's going to tell me, hey, I have earnings on Coco. I just created an alert and it's going to tell me, be aware that you have Coco earnings on Wednesday after market. So please, guys, if you have any questions, let me know on the chat. And I'm gonna start sharing this one, and I'm gonna go back to my Q&A one. Share. Here we are. So let's see, what do we got here? What do you think, since there has never been a soft landing? What would you do chart? Thank you, Vanna. I appreciate the class. Yeah. I think the soft landing is happening already. I think I mean, remember, we have one specific thing happening. We are in elections years. We have elections, and even so far, I don't get into politics too much because I don't like talking about politics. But there is an expectation that if Trump wins, the market is going to do better. One thing has nothing to do with the other, but sometimes expectations move the market. So we will have to be careful and have our eyes open on what the news are happening and how the news affect the price action. That's what I do. I don't try to guess what's going to happen. I trade what the price action is giving me, and I try to anticipate what the price action is going to be, but I don't know what's going to happen for sure. So I just try to protect myself the most that I can, and I try to position myself in a way that I'm set to success. So I try to, if I see that the market is coming down, I try to see how do I protect myself, and if I see that some gossip, or I don't know how you want to call it, some street talk, it's saying that Trump is going to win and that's going to be great for the market. Well, I just try to be aware and try to position myself to try to take profits out of that move. I don't care if it's up or down. I just try to set myself to success, either up or down, and not to be overexposed. Nike looks really good to break 73-point strong resistance in our chart. Looking for a break to add a swing. So you want to go, let's do some charting. Let's go here. So Nike, let's see what Nike is doing on the 1 hour. This is where we are in Nike viral. I'm going to grab 90 days. This is what happened on the last earnings. We flushed completely. And then here's where we are. We have not really moved away, and I wanted to see if on these days it holds the 20 daily SMA, and that's going to be a very important information to me. I like to trade out of the daily SMAs, and if I see a hold of these 20 daily SMA, I might get longs to see if we go back up. Do you want to see something great that happened today? Look at this, guys. Look at what SPY did today on the, look at the hold of today bounce back. Look at that. I haven't moved anything. Look at the week touch. What is this? Daily 50 SMA. Look at how it touched it and jump up. And if we see this on the 5 minutes, look at this. The only thing that you need to do today is be patient. Leave all of these alone. Wait, and you see that 50 daily SMA, grab calls, and get out somewhere around this area. This line here is the opening. So this is where we start opening. You get out, hold, and you are out just by holding the 50 daily SMA. That's why I like it. Sometimes I have this is my daily SMA. I got the 20, the 50. You will see them here. I got the 20 blue, 50 is the yellow one. Let me see, go to the daily 4 hour. 20 daily, 50 daily, 100 daily, 200 daily. That's all I need. Tim, those are the ones that I like to trade from. And you see SPY, what happened to SPY on this section here? It went down, it tried to resist on the 20, went down, it tried to resist, it broke down, and now it's trying to resist on the 50. So I want to see what, depending on this week, the market is going to hold and try to go up and try to get back to where the 20 is. Or if we don't hold, it's going to break down. If we break down, it's going to try to look for the 100, somewhere around here. These are my levels. It's going to go around this area here, here, here. So I like viral. I like Nike, but it has to hold my 20 daily here on top. So any other questions on the sector, guys? I can find them in my TOS. Will you share this script? Marina, what can you find? The daily? Here. If you go here to studies and you go into daily SMA, you can see that. If you just write daily, it should be daily SMA. And then when you click on the daily, it's going to give you a default one. And then you just click on the cog here on the setting wheel and you change it to 50, you change the color, then you click again, add another one, you click it and change it to 200 on here on the length, and you change the color, then click here, add another one, and then you change, and you do that 4 times, 100, 20, 250. Yes, they will show in any time frame. MO, heavily invested. Ultra is looking great for your investment. Look at that. Look at the 4 hours. You have a beautiful bounce and hold of the 50, then break and hold of the 20, and it's just skyrocketing viral. You should be just banking there. Let's see the weekly. Here's where we are. I will do something like probably this, this, then from here I'll go to here, and here. So this level here, viral, come from here. This is 2021. Look at this resistance. So be careful with the 51.14. If you come close to here, you still have a little space. If it breaks and holds, you should go to this level 1, 2, 3 times, holding this level here at 53.82. You can say that it's between here and here. 54, maybe you can, let's make it even. This is 54, and then all-time high here, or for example this. So 39.6 your average. Are you kidding me? What are you talking about? You are like, this, you're just showing off. You're showing off right now. You have that position at 39. You're showing off. You bought here perfectly on this level. Wow. Yeah, well, you're showing off that you have that position here. You're just banking here, my friend. Congrats. You are somewhere around. Wait, hold on. When I'll do this. Okay. 30% on the movement here on those shares. This is beautiful. This for me will be a trim on 30% and then see if it goes up or down. But if you are huge on this position, I will trim some at 30% in all my stock position and then use that money to get into rotation. I will go into a market rotation and see for another whatever it's new and whatever it's moving. So, but beautiful, beautiful, beautiful chart, great entry and up. Same with CVS guy. Viral, look at that CVS trade. If it tries to go to that 67, 65 here, it will be awesome, but it's finding a lot of resistance. 1, 2, 3, 4, 5, and not breaking up. So I'm being very careful with the position here. Still holding because it looks good, but let's see. A little weakness here. Finding weakness. You see the candle there? This candle. Trying to hold, but let's see if it breaks up. Yeah, beautiful. Beautiful, beautiful. All right, guys. Do you know if I can do you know if I can you can see the daily SMAs on TOS mobile? I don't use Dolly TOS mobile with charging. I only use TOS mobile for my positions if I'm on the go and I need to sell any position, but I don't trade on the phone. I try to stay away from trading on the phone the most that I can. I just set my stop losses or I sell a position. That's the only thing that I do with my phone. I love to trade on my computer. I love to have my charts. And when I use charts, I use Webull on my phone. I love the settings. I use the 50 and the 200 SMA, EMA on my phone. I have it on the light scheme. And for some reason, I just see it very clear, all the trades there, and I love it. But I don't use TOS on the chart. So guys, if you have any more questions, let me know on my DM. Thank you for sharing tonight, and I hope this was useful as a general knowledge lecture and information. If you have any more questions or you want to share anything, just let me know. Thank you for the company and have a great night, everyone. Thank you for the questions. Take care.